Have you ever wondered if a company like Uber is, really just about rides and deliveries, or if it's maybe quietly turning into something, well, much bigger, maybe even a super app that could shake up whole industries? Today we're going deep on Uber Technologies, Inc. That's UBER on the stock exchange. We want to uncover what's really driving them under the hood. And this deep dive, it's based on a detailed stock analysis report we looked at, plus Uber's latest Q2 2025 earnings call and some recent news too.
Exactly. And our goal really is to boil it all down for you. We want to pull out the key things, the financials, the strategy, their competitive edge, all the stuff that defines where Uber is right now and where it might be headed. We're aiming to give you those important nuggets, that insight from all these sources.
Okay, let's start with the basics, sort of Uber's core identity
Right.
before we jump into those recent financials. So, at its heart, Uber Technologies, they develop and run these proprietary tech platforms. They're the ones connecting you, the consumer, with drivers for rides, right? And also connecting you with restaurants, grocery stores, other places via delivery. It's basically become this huge player in on-demand logistics, and they break it down into three main parts. Mobility, that's your classic Uber ride. Delivery, food, groceries, all that stuff. And freight, connecting shippers and carriers.
Hmm.
Quick snapshot. Last close was $90.58 USD a share market cap. A huge $188.9 billion. And looking back over the last 12 months, their TTM figures, you've got revenue at $47.33 billion and net income at $12.63 billion. Pretty substantial.
Very substantial. And what's really striking is how this all came together in their recent Q2 2025 earnings. They released those on August 6th, and the results were, well, frankly, they were record-breaking. Across the board, they hit new highs on pretty much all the key metrics, financial and operational.
Like what specifically? Give us the highlights.
Okay, so gross bookings, that's the total value of transactions on the platform, expanded a really solid 17% year over year. Hit $46.8 billion. That's actually 18% if you adjust for currency changes. Trips were up 18% too, to 3.3 billion. Revenue also up 18%, hitting $12.7 billion.
Okay, strong growth across the board. But what about profitability? That's often been the question mark with Uber.
Right, and that's where it gets particularly interesting for understanding their, let's say, underlying health.
Right.
Adjusted EBITDA, that's a key profit measure, it surged. A massive 35% year-over-year jump to $2.1 billion. And that represents a pretty healthy 4.5% margin on their gross bookings. Income from operations, even better, up 82% to $1.5 billion.
Wow, 82% increase there.
Yeah. And to top it all off, the cash generation was exceptional. $2.5 billion in free cash flow just for the quarter, and an incredible $8.5 billion over the last 12 months. This surge in profit, it's not just bigger numbers. It really signals, I think, Uber maturing. Moving from that growth at all costs phase to actually showing serious operational leverage and profit generation, that's huge for investor confidence.
Those are incredibly robust numbers, definitely paints a picture of strength. But the big question for investors, for anyone watching Uber really, is how do they keep this going? How do they sustain this momentum? And maybe more importantly, what makes their business actually defensible against all the competition out there? It's a tough market.
That leads us right into what analysts often call Uber's wide economic moat. It sounds a bit technical, but it's basically their strategic advantage. And it's built mainly on two things: really powerful network effects and significant switching costs.
Okay, break that down. Network effects.
Yeah, think of it like this. The more people using Uber, the better it gets for everyone. More riders. That attracts more drivers, which means shorter wait times, which attracts more riders. Same on the delivery side. More restaurants means more choice, attracts more diners, which attracts more restaurants. It's this positive feedback loop, this virtuous cycle.
Right, makes sense. And the switching costs.
Well, once you're used to the app, have your payment info stored, maybe you're a part of Uber One, it's just easier to stick with it than constantly trying out competitors for maybe a small saving. But the real core of this moat, according to the analysis, is their integrated platform strategy, combining mobility and delivery.
Ah, getting people to use both rides and eats.
Exactly. And the data here is fascinating. Consumers who use both services, they stick around longer, 35% higher retention rates, and they spend more. 3 times the gross bookings and profits compared to people who only use one service. That's a huge advantage over, say, a company that only does food delivery.
So they can cross-sell really effectively.
Precisely. It's a low-cost way to acquire users for the other side of the business. They don't have to spend a ton acquiring a brand new delivery customer if they can just convert an existing rider.
Yeah.
And here's the kicker. Despite how powerful this is, fewer than 1 in 5 consumers actually use both segments right now.
Wow, so huge potential still just within their existing user base.
Massive untapped potential. And then you layer on things like the Uber One program. It's been a huge success, 36 million members already. And those members spend 3 times more than non-members. That really cements loyalty.
That definitely creates a powerful dynamic. But it's not just about having both services, right? The sources mention something about tech, personalization.
Right. They're constantly investing in hyper-personalization, using advanced AI models to tailor the experience, make suggestions, basically making the app stickier and more useful for you. And this is all part of their move towards becoming a super app. And here's a really concrete example of that synergy. The mobility app, the ride-hailing part. Just through that integrated tap for delivery, it's driving $10 billion in annualized delivery gross bookings. That's like 12% of the total.
Just from people clicking over from the Rides app, that's impressive integration. Okay, so that's the current strength. But looking further out, what's next for Uber? Where does the long-term growth come from?
Well, looking ahead, the prospects still look pretty substantial. First, just basic audience growth. It's healthy, running at 15%. And like we said, penetration is still relatively low, only about 20% of adults in their top 10 markets. So lots of room to just get more people onto the platform.
Okay, more users. What else?
Second, they talk about this barbell strategy. It's kind of a neat idea. Think of it like offering both really affordable options and really premium ones. So they're expanding lower-cost products like Moto, their two-wheeler service in some markets. That's doing $1.5 billion in gross bookings, growing 40%. Huge growth there. But at the same time, they're pushing premium services. Their main premium ride business is over $10 billion now, growing 35%. And the reserve feature, where you pre-book rides, that's growing at 60%.
So capturing both ends of the market, high growth and budget options and high growth and premium.
Exactly. Means they can appeal to a wider range of people and capture growth wherever it's happening. Smart.
And speaking of looking ahead, what about the really big transformative stuff, like autonomous vehicles, AVs? The sources suggest they're making some pretty serious moves there.
Expanding operations, right. Austin with Waymo, Abu Dhabi with WeRide,
Yeah.
even launching exclusively with Waymo in Atlanta now.
And they're not just sticking with one partner. They've announced partnerships with the whole range of AV developers and car makers, OEMs. Names like Baidu, Lucid, Nuro, Wave.
So it seems like they're building an ecosystem, not trying to build the cars themselves.
That seems to be the strategy. Which brings up a really important question investors always ask. What about the cost? AVs seem incredibly expensive to develop. How does Uber handle the capital intensity and, eventually make money from this?
Yeah, that's the billion-dollar question, maybe trillion-dollar. Well, Uber's view is that this is a strategic investment, and they actually compare it to the early days of their delivery business. Remember, delivery wasn't profitable for a long time either. It took investment to build scale. They seem confident they can attract plenty of financing from third parties, think private equity, banks, once the revenue model is actually proven.
And they have examples of that working.
They point to things like Waymo AVs. Apparently, in the areas they operate, those robotaxis are busier than 99% of human drivers. That shows incredibly high utilization, which is key to making the economics work, high revenue potential. And regarding competition, Uber's stance is interesting. They see the AV market as very, very big, not a winner-take-all situation.
So room for multiple players. What about Tesla? Everyone talks about Tesla and self-driving.
They address that too. They basically said that from what they observe on the streets, Tesla's actual deployment is very, very small.
Yeah.
And they haven't seen any real impact on their business trends in key markets because of Tesla's presence, at least not yet. Uber's positioning themselves as the platform, the network manager, leveraging their existing strength in balancing supply and demand, rather than betting everything on building the tech from scratch.
Okay, that makes sense. So strong performance, clear strategy, ambitious future plans. What does this all mean for the shareholders, for you if you're holding UBR stock? How is management planning to, return value?
Yeah, they've been very clear about their commitment here. It's quite strong. They just announced a new, massive $20 billion share repurchase authorization. You add that to what was already authorized, and it totals about $23 billion available for buybacks.
$23 billion, that's a lot.
It is. It represents something like 12% of Uber's entire market cap right now. It's a very significant commitment. And they've also pledged to allocate at least 50% of their free cash flow, that strong cash flow we talked about, to share repurchases in the coming years. They plan to be active every quarter, maybe even buy more if the market dips, and they're already doing it to reduce the share count by 1% just in Q2. So it's not just talk. They're actively returning cash.
Okay, so a big focus on buybacks. Now, what about the analysts? What's the general view on the stock price itself? We mentioned the price is around $90.58. The specific analysis we looked at had a fair value estimate slightly lower, $89.38, or a price target maybe around $85.07. But you also see that the average analyst target over the last 6 months is higher, like $104.75. So, bit of a range there.
Definitely a range, which points to the bull and bear arguments, right? The bulls, they're looking at that dominant platform, the strong financials, the huge untapped market, the smart AV strategy, and this big commitment to shareholder returns. It's the positive case.
Right. And the bears. What are their main worries? What's the biggest risk here?
The bear arguments really circle back to a few key things. One, AV profitability is still unproven. Can they really make money there without just burning cash? And the capital needed is huge. Two, valuation concerns. Is the current price maybe already reflecting too much future optimism, given the risks? Three, that challenge of cross-platform adoption. Can they really get significantly more people using both rides and delivery? And four, just the sheer intensity of competition. It's always there in both mobility and delivery.
Makes sense. A lot to weigh.
Absolutely. But if you try to synthesize it all,
Yeah.
yeah, okay, it's trading maybe a bit above some fair value estimates right now, but Uber's execution has been really strong. Their competitive moat seems to be widening with those network effects and platform synergies, and those long-term growth plans, especially with AVs and deepening the platform integration, they look promising. So overall, the fundamental direction seems pretty positive, assuming they keep executing like this.
So, thinking bigger picture then, considering Uber's evolution, moving towards being this super app, investing heavily in AVs, how might their business model keep changing things? Not just transport and delivery, but maybe other industries too, especially if they start like externalizing their tech, offering their advertising tools or AI capabilities to others. Could they end up being the tech layer for, well, almost any on-demand service down the line, far beyond what we think of today?
That's a really provocative thought. It's definitely a complex space, but also incredibly fascinating to watch Uber navigate it. Their journey is clearly far from over, and yeah, it definitely encourages all of us to keep exploring how tech keeps reshaping things, challenging how we even define what a company is.
Absolutely fascinating. Well, thank you for joining us on this deep dive into Uber Technologies, Inc. If you found this useful, if you want to stay informed on other deep dives like this, please do subscribe to the channel and definitely hit that bell icon. It really helps support us so we can bring you more analysis like this. Thanks for listening.